Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Surgery Partners, and let me tell you, the numbers might just make you need a doctor. Get ready for a checkup on their financial health. This report basically tells us how Surgery Partners did recently. We're going to look at some important things like how much money they made and what big decisions they made. It's like giving the company a financial exam to see if it's healthy or if it needs some treatment. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat with other business enthusiasts. First things first, this report is called a Form 8K, and it's like a quick update that companies have to file with the government when big stuff happens. This particular report is dated June 6, 2025, so it's fairly recent. Surgery Partners Inc., that's the company we're looking at today. They are based out of Brentwood, Tennessee. They have common stock which trades under the ticker symbol SGI listed on the Nasdaq Global Select Market. So they are a real company that you can invest in. Alright, let's jump into the main event. It looks like they had their annual meeting of stockholders on June 6, 2025. That's where the people who own the company get together and vote on important stuff. One of the big things they voted on was a new incentive plan for the people in charge called the 2025 Omnibus Incentive Plan. Basically, it's a way to pay the executives like the CEO with things like stocks. If you want to know all the nitty-gritty details, you can check out their proxy statement from April 24, 2025. That document has all the info about the plan. Now let's talk about the votes. On April 8, 2025, there were about 128 million shares of the company's stock that were able to vote. So these are the people who got to decide what happens. The first thing they voted on was electing some directors. Directors are like the bosses of the company, and the stockholders chose 3 people: John A. Dean, Teresa DeLuca, and Wayne S. DeBate. They will serve until the annual meeting in 2028. John A. Dean got about 106 million votes for him, compared to about 9 million votes withheld. Teresa DeLuca got about 102 million votes for her, with about 13 million votes withheld. And Wayne S. DeBate got about 105 million votes for him, compared to about 10 million votes withheld. Next up, they had a vote on how much the top executives get paid. This is an advisory vote, so it doesn't force the company to do anything, but it shows what the stockholders think. Looks like about 96 million votes were cast in favor of the executive pay, while about 19 million voted against. So most people seemed okay with the pay packages. Then they voted on that 2025 Omnibus Incentive Plan we talked about earlier. This time about 101 million voted for and about 13 million voted against it, so it passed. This means the company can now use that plan to pay its executives. Finally, they voted on who should be the company's accountant. They chose Ernst & Young LLP for the fiscal year 2025. That vote was overwhelmingly in favor, with about 122 million votes for and only about 30,000 against. So it seems like everyone's happy with the accounting firm. If you want to dig into all the details of the 2025 Omnibus Incentive Plan, you can find the full document attached as an exhibit to this report. Now let's step back and look at the big picture. Surgery Partners had a pretty standard annual meeting. The stockholders voted on the usual stuff, electing directors, approving executive pay, and choosing an accounting firm. The most interesting thing is probably that new incentive plan for the executives. It's worth asking whether these kinds of incentive plans are really in the best interest of the stockholders. Sometimes they can encourage executives to focus on short-term gains instead of long-term value. However, it seems that the stockholders are aligned with management's direction for now. Overall, Surgery Partners seems to be doing okay, but it's always worth keeping an eye on how these decisions play out in the long run. Keep in mind that this report is just a snapshot in time, and things can change quickly in the business world. Alright, that's our breakdown of Surgery Partners' latest filing. What's your take on these decisions and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.